All right. So now, firstly, we have, if you're familiar with SMC, we have one trading model, one trading SMC, which is this one. See, we have our sweep. We call this one our sweep of liquidity. This is our sweep here. And if you're going through the videos in the group, you see mostly we're doing this something like this. We have our sweep and break of structure. Once we have this sweep here and this break of structure, what happens to this high? This high becomes protected. This high becomes a protected high. And we always have liquidity inside here. Then price comes back to this QMR and we have this sell. While for a buy scenario, we always have something like this. Price sweeps liquidity, break structure to the upside. Then we expect price to always come back down. After taking out liquidity inside here, we have this buy to the upside. So this is our sweep. This is our sweep here. And yes, we have our break of structure. Then this low here becomes protected. It becomes a protected low or a strong low. This one here also become a protected high or a strong high. That means we don't expect price to come back to this guy, especially this liquidity inside here. We don't expect price to come. We don't expect this to happen because we have this sweep here. This sweep validates this low, making it strong, and this break of structure also validates this low, making this low a strong low or a protected low. So we don't expect price to come back down here. We expect price to come somewhere inside this range. This is a range low, this is a range high. How do we know our ranges when we have a break of structure or have broken that range and we have internal structures inside here which helps us confirm a range. Like for example, we're going to have something like this break structure, have this minor structure, so price comes to the top of the range, which is here, then break structure to the downside again. That's how we confirm our range. So we have this inside this point on the same time frame, not on any lower time frame. On the same time frame. Well, if we have a range on the 4 hours, I told you guys look for your minor break of structures inside still on the 4 hours. You don't go lower. It is not necessary. So we have this our low is protected. We have this range, this is our range. We expect price to come inside this range. This is our range high, yes, our range. So we expect price to come inside this range and we buy. And how do you validate this range? Use our Fibonacci tool. Place it from this range low to the range high. And you're going to see your premium and your discount. This above zone from this 0.5 to this 0, this everything here is a premium zone. And everything from this 0.5 to 1 is our discount zone. So we always want to take buys when prices in our discount zone, and we always want to take sales when prices in our premium zone. You understand? Same thing for this one. Take your Fibonacci tool, place it here, you bring it here. So we always want to avoid buys that hasn't come to this our discount zone, to this our premium zone. So the sales, if what this for a sales scenario, we always want to take sales that are in this premium zone. If it's still below here, it's not the right zone to sell. So what are we going to be doing now? Let me show an example here. We are going to be looking for stuffs like this. You understand? And now we look for key levels inside here. You understand? It's something I trade. You get not many people do this trade key levels this way. But I always look for my sweep, break of structure, and all the stuff on a higher time frame. And I expect price to come now inside this range. Why price is inside this range? Where am I looking for my key levels? Inside this discount zone. Are you getting? I look for my key levels inside this discount zone. Once price comes back into the discount zone, it taps at any key level here. I don't just because it may price may come inside this discount zone and choose to react from a key level somewhere here, or choose to react from an open close somewhere here, or may choose to even come right to this apex, to this last resort zone here. So these are zones where price may want to react from. So price may react from here, price may react from here, price may react from here. So now, how do we know which zone price will actually kick off from here? Because we don't actually know the exact zone because it's already in the discount zone. So anywhere in the discount zone, we're going to have price kicking off to the upside. Are you with me? So now, How do we have this? So still on the higher time frame, I don't just go to the lower time frame and start looking for entries or no. I start looking for my storyline because if I have a key level, is this a key level here? I'm going to have a storyline reaction here. If this key level is valid, I'll have a storyline reaction here. If this one is valid, I'll have a key level, a storyline reaction here. I hope you guys know how to mark out your storylines and everything. So now let's go into it. I'm going to show you guys examples. I hope this is clear. I'll show you guys chat examples. Unfortunately, my trading view subscription just got finished, so I'm not actually able to backplay, but we'll just do the one we are able to do. This is a pair line. Dutch USDT. Okay, it's Dutch USDT. So on Dutch USDT, let me see. I think I always want to see this on the on the daily time frame so that I can have, for those of you who always complain saying they want trade on a lower time frame, this is an opportunity you can take to have your lower time frame trades. So what am I always looking for? I go on a daily time frame, right? I go on a daily time. If you wish, you can start on the weekly time frame. It's up to you to look at the overall trend. But see, the trend here is actually bullish. Okay, maybe price is reacting from this key level here on this daily time frame. So this last trade I took, I'm not sure it's going to hold because this price may be reacting from this key level. Turn on your line chart, you see this an A-shaped key level which was broken, and price you want to react from it because after it broke this level, it also broke structure to the upside. And you get it. So price may actually want to come back, tap here, and continue its buy momentum. So how do you confirm this? Look for your storyline. You have this key level here, daily time on the weekly time frame. Go now to lower time frame like daily, and you wait. This is the structure we want to structure here to be broken. This one. If this high gets broken, then we start looking for buy setups to this zone. I get in. Start looking for buy setups to this zone. That's on a daily time frame. Start looking for retracement, roadblocks, and all those things to have your trade entries. But we're not doing that now. So actually, on this daily time frame, I just came on the daily, and I just want to see. I want to see bearish momentum. I want to see that the market is actually bearish. You get why will I know it's bearish? Because it's giving me break of structures to the downside. And it's giving me this break of structures to the downside. So I expect price to, I know price is bearish from here. So what do I do next? The first thing I always want to do is I want to turn on my line chart. Like, you see, forget about this messy right here. I want to turn on my line chart. Let me take everything here off. So on my line chart, I don't know, since we don't have this replay tool stuff, I don't know, we just manage it like this. So what happened? I want to see this structure. I want to see this structure. I getting this is just the beginning of my QMR before the complete set is going to give me something like this. I getting this is what I want to see because this already gives me a high probability chance that price is going to go to my direction. So what will I have here? I have a sweep, which is this sweep here is actually my left shoulder, which it can also be valid because price may actually come back here and sell off to the downside. But for now, let's just keep it as sweep here. So we don't get confused. Then we have this break of structure to the downside. Here's our break of structure to the downside. Are you getting? So now I already I know this high here is protected. What am I expecting price to come back here and sell off? So now this is the daily time frame. What happened here? We had our sweep. I see here we had our sweep. And next followed, we had this break of structure to the downside. Are you getting? Once you have gotten this on the line chart, what do you do next? Turn on your candlestick chart. I get you turn on your candlestick chart. So you're going to now this way you need the wicks. This way you need your wicks from me, this high to this low. You can use your Fibonacci to look for your discount. But this one, I'm not sure price actually came to discount. Let's see. Yeah. So this is our premium zone. So we expected price to come back to this premium zone. So actually price may come, but as I said, this everything happening on this Dodge is actually bullish. You get, I want this guy here to be broken. This one. Now start looking for buy setups. I'll look for a retracement and probably the price may come back to any key level down here. Tap here and we have a buy. But let's focus on this one. Let's focus on this one for now. So now this is our range here from this high to this guy here. So we expect price always come to this inside this our premium zone before we look for sales. But unfortunately, price never came. But let's see what happened. If you can mark, let's mark this line. It's okay. Can remove this guy if your Fibonacci. So this is where we want to look for our buys for our sell setups. So now, once you have gotten your direction, because the first thing you want to look for is your direction. And how do you look for direction? What I just showed you here. That's how you're looking for your direction. Your like your present direction, not the overall direction, your present direction. I will now want to go to the lower time frame, and what am I looking for on that lower time frame? Key levels. You get key levels inside my premium zone. So here we had the key level. Let's see, line chart. It's an A-shaped key level here. So we have many key levels here. Actually, we have this other one here, and we have this V-shaped key level here too. And we have all these ones are key levels that are already in our premium zone. But now we don't know which one price is actually going to react from. You get, that's where now we start waiting for a storyline reaction. So back price came, I think price tapped into this key level. Let's see. All right, price tapped into this key level. So whenever price taps into a key level, what do you always want to look out for? You want to go one time frame lower and look for a break of structure to the downside. That's the beginning of a storyline. Are you getting? That's the beginning of a storyline. But here it was obvious. You turn on your line chart, you're going to see this was our break of structure here. You don't need to go one time frame lower. That will be on the 1 hour time. So we're already on the 4 hour time frame. If you see it here, you can take it. If you don't see it here, that's when you should go to the 1 hour time frame. Because I don't want to go right down to a lower time frame that what I'm doing is not going to be valid. So here, this is our break of structure to the downside. So price really broke the structure to the downside. And what are you looking for now? We're expecting reversals to the upside. Reversals, price to reverse here because we're going to have a new range. Okay, we're going to have a new range which is from here to here. So we expect price to still come to the premium zone here. That's just long stop, but just know we are going to have price always retrace to this zone here and we have a sell. If you understand SMC well, I guess if you understand SMSCC, well, I think this was where the sell was. Let's mark it then. Go to the line chart, see what we have. So we can now scale to the lower time frame. Lower time frames, I think this was where we had this entry from here. This V-shaped key level. As in this V-shaped key level, I think we had also liquidity. You can use this one, anything inside here as liquidity, because this was the first pullback after this break of structure. Yeah, this was the first pullback after this break of structure to the downside. This was the first pullback. Even though it's not that close, but price actually came, tapped into this zone here. And we had this price down. Stop loss can be above this resistance. Right targeting. Now go back to the higher time frame to look for your target. Daily time frame and target is low. Because we know price move from key level to key level on the 4 hour time frame, you're going to see it more clearly. Somewhere around here. So this was a trade here. Then let's check Euro USD. Change program. So this was also a buy here on this Euro USD. Same thing, higher time frame, daily time frame. What are we seeing? Price is actually bullish. Price is actually bullish here. So what do you expect? Let me take everything, take this out. I hope I'm making sense. What are we looking for? We're looking for something like this. Sweep, break of structure to the upside. Then expect price to come back, pull back inside our range, and we have a buy. So what are we going to have here? To have that, just go to the line chart. I think on this line chart, I could use this one as a sweep. The price went down and broke this structure to the upside. This one. Price broke this structure to the upside. So what are we expecting? A reversal inside our range. Where's our range from here to here? So you can still use your Fibonacci from this low just to be on the safe side, right? To be on the safe side. So here's our range low and here's our range high. So what happened? Price actually came inside our discount zone. Here's our discount. Price actually came to our discount. So once price have already gotten into this discount zone here, what are you looking for? Your key level should be inside this zone. From down here to here, when you're marking out your range, mark out the wicks too. So you know your key level is going to be inside this zone here. So in case you don't have, it's like my connection is unstable. So you always want price to come inside here, inside our discount zone before we start looking for buys. So what do we do next? One time frame lower to look for your key levels. If that's in case if it's not clear, if it's not clear on this time frame. If it's not clear on this time frame, let's see what we had. This was reversals. Yeah. Fresh V-shaped key level. This is a fresh V-shaped key level here. Fresh V-shaped key level. Price came to this key level, tapped into the key level. What do you want to see? This was the first tap here. I told you guys, whenever you have this first tap, you can mark it out with a vertical line so you don't get confused. You go one time frame lower to look for your break of structure. It's one time frame lower here. Break of structure. Turn your line chart even if you're confused. Yeah. You had this break. This was a structure here. This one. Price broke this one before the touch. This was the touch here. That's why I always emphasize on this was a touch, the first touch into the key level. This was the first break here. Price broke this one secondly here. So now, let's take this off. So you just need to make it's very, very simple. So price came back down here. I think this trade here, everything happened here. You could take your entry from this one. Same thing here. We have this sweep, break of structure as confirmation. Then we expected price to come back into. So I think this one, let me see. Yes, price came here. This should be a buy from here. Should be a buy from here. We're targeting the next external range high, I think, from this way. If it's known, then this was the high, you should be targeting this one.
But bro,
Yeah, I can get you.
okay, let's just say when a rate time like market price action, this particular trade like this, if we actually properly waited for the break of structure,
Mhm,
then we're waiting for a pullback to a key level. This particular trade, we will not. I don't think anybody would have waited for like all this to play out. If anybody was taking this trade, the trade would have probably hit us up because if we're taking it from the first break of structure, then it retraces down to a key level.
mhm.
Are you trying to get what I'm saying?
Yes.
If we would have waited for a proper break of structure, then waited for it to retrace
O-
back to a key level at that
On
point in time,
on the daily time
at
frame
that point,
or
not on
4 hour
a
time frame.
daily, like after the break of structure and on the 1 hour time frame.
This break of structure, yeah, this one.
After this, yes, after that, not that one, the
The
first, like
main,
after the
okay,
first tap, after
the
this
main break of structure.
the main tap, yes, the
Yeah,
main break of structure. If we're to take an entry at this, I think
this
would have
week.
I don't know,
This week,
not,
if you could take a trade from here, you get once you've gotten your direction right, that's your direction.
yeah,
Price is going to go there unless it just wants to go and hit your SL. Are you understanding? Unless
I'm
price just want to go
understanding.
and hit your SL. Because even here, this is a key level where you could take this buy from here. You could take this buy just that everything here, this week. If you want to take a trade from here, you get once you've gotten your direction right, that's your direction. Are you understanding? Unless price just want to go and hit your SL. You could take this by just that everything here. But me actually, I'm just showing you on what actually happened because me, if I was to take this trade, I could take it somewhere right here. You get, and maybe it may take me out or what anything happen, but this is what already happened. You understand? So on real
Yeah, it's
time,
just it's like
actually,
the second this setup now that you just marked out is more clearer and more
I'm
better.
happy. Yeah.
This particular one, yes.
But
But
now,
I was just trying to see like in a real life situation. I don't think we would
yeah,
have waited for this long for
that's
this.
true.
It would have taken, yeah. So I was, because most of the times like that when I try to analyze the market by myself, yeah, I just realized that things actually happen. Like I can find a setup immediately after it has tapped and a break of structure, but I might eventually get taken out. The market is going to give another clear better setup, like if I was supposed to wait. But
Yeah.
most of the times it doesn't happen like that. So I'm just really like really confused on how we can do it. But it's the market, sha. We cannot control the market. It just happens the way that it happens.
That's true. So for me, honestly, if I was here, I could take this vibe somewhere here. You get now. Everything here, I don't know what is going to happen, what's going to actually play out in the future because it's going to be like this. You understand? Price came to the key level tap, and I'll start looking for buys from here. Start looking
Yes,
for
I've
buys
noticed
from
a
here.
lot of times that when market gets to the key, it gives a snipe entry. Sometimes, even okay, let's just say if I find a key level at on the four on the daily,
Mhm.
and then I go down to the 4 hour time frame. Sometimes I don't even see a break of structure. I just see how market just keeps retracing back up. It just keeps like just say I find a daily key level for a buy setup here.
Yeah,
I go to a 4 hour time frame. I realize that there's no like where market is at that time. There's no clear place for a break of structure. But maybe if I go down to 1 hour time frame, I can see somewhere that it might break structure, then retraces back down to target a POI. Then before I can eventually buy from there. Just that most of the time, I don't see that level that I can wait that where market should break structure on the 4 hours. So can I always go down to the 1 hour again to see look for another
yeah,
level
yes,
that
exactly. You
can
can
wait
go
for?
down to that's what they call refinement. You can go down to a lower time frame, like 1 hour, 15, 30 minutes and 15 minutes to refine your setup to get so it's actually correct.
Thanks.
So see something here. If I was taking this trade this way, I could actually take it from using this one as liquidity. Using this one as liquidity. But let's say if you refine, if actually you decide to refine this to the lower time frame, you're going to make more money because on a lower time frame, this is going to be your entry. I think everything is just refinement. Just go down to the lower time frame again. You see, everything here was liquidity. Where's your entry? Here's your entry here on a 30-minute time frame. So it's very, very simple. Very simple. And here again, what do we have? We have our sweep. We have our sweep here. This now your setup. Setups from the 1 hour time frame lower to the 15 minute. Then we have a break of structure. We have a break of structure. So expect price to form liquidity. This one, someone will enter here, but just know your stop loss should be below your key level point here, because I don't think price will ever come back to the zone unless it just wants to take you out. That means your setup wasn't correct. Let's check out another example. There are actually so many examples, just that we can't start scrolling backward when I don't have the premium trading book. USD card. I think my USD card, let's see, daily time frame, line chart, daily time frame. I caught this sale. I think I shared this one with you guys. I caught this sale since this was reacting from this key level, break of structure and all the stuff from here. And I think there was something happening here. Let me see. Oh, this one, this cell here, actually, this one. So what happened? I had my sweep again from here. You can see I had my sweep here. This was a break of structure at this point here. There was a break of structure at this point here to the downside. That's on the daily time frame using your line chart. I get on the daily time frame using your line chart. You want to see your sweep, break of structure to the downside on the daily time frame. Turn on your candlestick chart, mark out your range. Where's your range high? Here's your range high. Where's your range low? Here's your range low. We're expecting this your equilibrium point, your equilibrium line here. So we expect price to come above your equilibrium line inside your premium zone. That's when you look for your key level. Because inside here, we have so many key levels here. We have this open close, which is not more fresh, but this is unfresh because of this week. We have this A shape. We have this open close here. We have this other open close. We have this V shape. So these are key levels where price can actually react from. But now, how do we just need to start monitoring these ones inside here. But now on the 4 hour time frame, not even on the daily time frame. So on the 4 hour time frame, what happened? Let me take out this guy. 4 hour time frame we had. Price came back into this zone here, which this was our key level. This V shape that turned into an A shape. So we had price come there, tap, even though it's an unfresh level. I get it because of this week. It's an unfresh level. V shape, tap with the wicks, cross with the body, made it fresh, tap with the wick, made it unfresh. The price came, tap there. Now what happened? We need to go now lower, one time frame lower or still on this 4 hours. So if it's not obvious on the 4 hours, you can still go one time frame lower. But here you can see this was a break of structure here. But I think I went one time frame lower, one time frame lower. This was on the 1 hour time frame. What happened? I had this break of structure to the downside. After the break of structure to the downside, simple, turn on your line chart. Since I'm already on the 1 hour, what do you want to see? I want to see sweep, protected high or strong high, break of structure. This was liquidity that formed inside here. This was liquidity. So what happened? Price came back to this key level here. I think let's go 30 minutes again. All right, 30 minutes. Okay. This is what actually happened. This one is more clearer. So we had this break of structure. On the lower time frame, always make sure you see something again like this. This same pattern. This same pattern, this one. Once you always have this, you're very, very lucky. If you can see this on the lower time frame, on the higher time frame, always use this QMR setup. It's going to help you a lot. So price came back to this QMR, this one. So for example, I taught you guys, I think last class we had, I explained what we call the last resort. These are zones where price will actually react from. This is the last resort zone. This one here, you can set your sell limits from here if you wish. You can set your sell limits from here if you wish, and price will come tap. But in case price doesn't come to tap, this is the best level, this QMR. This is the best level you should always look out for. So what happened? Price came, tap, and where are you setting your stop loss? Above here or above here? So in case you don't want any noise. And what happened? Price went down. And again, on this 30 minute, I think we had a trend line conference. Let's see. We had this trend line conference. Price tap here first time, second time, broke structure, came back, tap into our entry point. That's how you make your entry valid using trend line. There are videos on how to use trend line because we're going to use it often. If you see it, you use it. If you don't see it, don't use it. Price came tap and we had to sell to the downside. Same thing on here. Let me see this one. Daily time frame. Up is making sense. On the H24, if price is on the bearish trend, I need to see so then looking for key so yes, you go one time frame lower, which is the 4 hours, so that you always have quick setups. You don't have to wait a day, you don't have to wait 4 hours. So to go to the 4 hours, you look for your key levels on the 4 hours, especially when you have determined your trend. That's why you see I have this direction, key level, and entry. Daily time frame, you look for direction. You go one time frame lower, which is the 4 hours, you look for your key level. Then you go one time frame lower, which is the 1 hour and below, you look for your entry. It's very, very simple, guys. Very, very simple. Think here. Let's see what we have. Hope I'm making sense. It's not actually difficult. It's very, very simple. Very basic. I think also on volatility. It works on volatility. Let's see volatility V10. CB10 minus then this is the other one, the other key type of key level you want to look out for. This one too. This one you also want to look out for key levels like this. Price comes back, taps into the key level and sells down. That's when the trend is actually bearish. See on the 24 hours, this trend was actually bearish. What are you looking for? Turn on your line chart. What happened here? We had this V-shaped key level. This is a V-shaped key level where price actually came back to the V-shaped key level and reacted from it. So these are points where just using your key level knowledge, you can just take your sell from here. But it's a very risky sell. So that's why we always have these confirmations and all those stuff. So I think one time frame lower, this is a key level. One time frame lower. This is where price tapped into the key level on the 4-hour time frame. As I always say, mark out the point of contact. As a point of contact, turn on your line chart, look for the break of structure. Here was the break of structure. Price broke structure to the downside. This is an external break of structure, and anything inside this way to the right is an internal break of structure. So we are looking for an external break of structure. Here was an external break of structure before the line touched into the key level. Price broke structure to the downside. What do you expect? We expect price to come back to this. This was a last resort trade, a last resort zone where price actually came to. Last resort. Go one time. Let's see where I got my entry. Let's see. I think I used my line chart, but I couldn't see any QMR here. But there was a QMR. There was a QMR on this trade where I actually took this sell from. It should be a QMR. Okay, now I see the QMR. Here was a QMR. It looks tiny, but I think on a 15 minutes, it makes a little bit of sense. Let's see. All right, so now, where's our head? Here's our head. Left shoulder, price broke structure to the downside. Now we expect now the right shoulder to be formed. Turn on your line chart. That's where I marked this one and I use this one as liquidity. What happened? Price came, tapped here. This was the first tap. We could start selling from here, came back here, and we had price down to the downside. This was 1:21 risk to reward. That's a very, very high risk to reward, 1:21. So again, let's go, let's check another one. I hope it's making sense. It's very simple. I've tried my best to make it this simple to look for your direction because I noticed many people were facing difficulties in actually spotting the right key levels and direction. So I wanted this one to be very, very simple. Let's see. Okay, again here on the daily time frame, what do we have? You can see we have our sweep. See, we have our sweep. Take this off. Here's our sweep here. Break of structure to the downside. We have even a double break of structure. This was another break of structure here. So we have this break of structure to the downside. What do you expect? Reversal, because we already have this right shoulder. We expect price to come and fill in this right shoulder. So what do you do? From here, if you have your key, if you can spot your key level here, it's good. You understand? If you want, you can go on the lower time frame. I think I spotted this key level from here. This is an A-shaped key level or a QMR key level. Price actually came to the key level, tap into the key level, and we had this sell move. Use your Fibonacci tool again. Wire your thumb to the candlestick chart from this range high to the range low. You're going to see here's our equilibrium point. Above here, you look for your key levels from here. Don't start looking key levels below here. You're wrong. Look for your key levels from this line, exactly from this line to this line above. Here's our key level here in the middle. And what happened? Step one time frame lower. One time frame lower. What do we have? We have a break of structure, an external break of structure. How do you have an external break of structure? Turn on your line chart. Place this line at the point of contact. What happened? Price came back, broke structure to the downside. And what happened? I think this was what actually happened. This trade I didn't, these are trades I didn't take. You understand? So I just took them based on what price gave us. But actually, price went to our direction just from tapping here. See this way you could start your sell from. The price came, gave us liquidity. First pullback was liquidity. tapped into this key level and price dumped to the downside. Price was dumping to this point. So as I said, these are just based on what already happened. So take your time, go back test this, see if it actually works well. And always do well to send me your results. Always send your results to the group or to my DM. So I think here too, what happened here? Line chart, what happened? We had our sweep. Are you seeing how this thing is very easy? We had our sweep, break of structure. We have another break of structure here, making this very, very valid. And what do you expect? Once we have these kinds of QMR things like this and this protected guy here, price always come back here. Price will not just keep flying up to the upside. Price always return down here for going up. I hope this is making sense. Price always return back to this to this low here before going up. So what do? You can mark out your range from this week to this next week. So where's your range? Here's our equilibrium here. What happened? You want to look for a key level from this equilibrium to this point. One key level, open, close, another open, close key level, a QMR key level. These are key levels. They will expect price. Even this one also a key level. So now what do? You want to see which one price is going to react from. I get you want to see which of them price is going to tap and close above. So yeah, we had this one price tap into this one and close above. What do? Again, and take this off in case you're confused. What do? You want to go down to lower time frames. Where's your point of contact? Here's your point of contact. You want to mark it out with a vertical line and this is your external break of structure here. Turn on your line chart to make it more clearer. External break of structure. What happened? Price broke structure. And we need this, we're waiting for these reversals here. For these reversals. Go down, go lower, go lower, go lower. Go lower. And I think price came back to this A shape, which turned into a V shape. Price came back up there and started flying to the upside. So you can go lower again, go another time frame lower to actually refine your setup, to make it to actually refine it to make it more valid. Turn USDT. Let's see what we have. Works on crypto. You've seen it works also on volatility. Works well on crypto. I think here we had the same thing on this XRP USDT. Daily time frame. I think let me see. I'm making a mistake. All right, daily time frame. What happened? I had my sweep. Here's my sweep to the upside, making this guy protected and very strong. Then we had this break of structure to the downside. Where's my range? My range is from this high to this high. Turn on your line chart, turn on your candlestick chart, use your Fibonacci tool from this high to this low. Are you getting? So we expect to reverse out from here. So where are we looking for our key levels from this point? We're looking for our key levels from this point to this point. These are key levels inside here where price can actually react from. But we want to actually see price reacting from those points. So what do we do now from here? You can step one time frame lower. So actually still look for your key levels. You're still looking for your key levels. Because the first one was just look for your direction. I think this should be the key level here. If not this one, should be this one where price reacted from. If you're confused on your line chart to actually see it well, should be this one. Price tap into this. This is a V shape. Or we can this a V shape key level here. V shape. Price actually tap into that key level. And we had this reversals to the downside. I think I had this sell here. But here was our break of structure down here. Right here, this was my break of structure here. And I think reversals, price is still to reverse for me. I think price is still to reverse to this one then. You have a sell, something like this. Something like this, price is still reverse there. Yeah, something like that, something like that, something like that. Let's check something else. About USDT. I hope I'm making sense with everything I'm saying. Check, I think this was on a weekly time frame. Weekly time frame again works on a weekly. What happened? I think this was monthly, yeah, monthly. What happened on this morning? We had sweep and break of structure, but this was a sweep. I think I used a week for this one. I use this week as my sweep, this one, this week. I use this week as my sweep. And what happened? Break of structure. But basically, since on the line chart, I didn't actually have a good sweep. I could use this one. But if you're using the candlestick chart, you could use this one as a sweep. The price actually swept this one to the downside and broke structure here. So I could actually use this one as my sweep. But nevertheless, let's just focus on what we're doing. Where's your range? Where's your range from this lowest point, the highest point? I think I showed you guys how to confirm your ranges. So where's our premium zone, our discount, sorry, from here to this point? This is our discount zone. We're looking for your key levels inside the zones here. One, it's another one, it's another one, it's another one here. It's another one even. You expect price to react from any of these key levels. What's the reaction? Price taps. So you may come and you don't need to actually wait for everything here to happen. You may come when it's already happening. Just follow the ride. Just ride with it. While waiting for it to happen, you are looking at other pairs. I think when another time frame lower. So this was our key level. We had it on this monthly time frame here, this key level. Turn on your line chart, you're going to see what happened. This a sweep, protected low, break of structure to the upside. You understand? So this is a QMR key level. Price actually came to this QMR key level, tap into the key level. Once price have tapped into your key level, we call this morning. Price have tapped into your key level, you can go one time from lower. You want to mark that tap. Here was a tap. Here was a tap. Yeah, I think then on this weekly was too long for me to wait for this guy up here before I could have my break of structure. I think I could not actually wait for this guy here before I have my break of structure. What did I do? Go lower, go lower here on the daily time frame. So if, as I said, if you don't have on a weekly, go to the daily time frame. It's going to be there waiting for you. This was what we had here. The resistance zone. Price actually broke the resistance zone. I think price broke the resistance zone. This one is actually a nice trade. Get so now this was liquidity, price came back here to this point, tap into this A-shaped key level, and we had this buy to the upside. I think let's go for yeah, the daily makes sense, the daily time frame. So where's your trade? We had price, liquidity, price tap into the key level, and we had this buy. So what happened? Price flew to the upside. Before starting all this is reversal here again on the daily time frame, we still have this sweep, break of structure to the downside. What happened? Price actually came. There was no liquidity here to engineer this one. The price actually came tap. I think it reacted from this key level here. For one time frame lower to the 4 hours, you can make it more clear. Yeah, make it more clear. Price came back here. So tapped into that zone and sold off. Let's see. Ava USDT. Let's see. I'm sure we have done USDT before. Let's check. Forex.com. So just work on this, work on it, work on it, work on it. It's going to actually help us. It will actually help us. It's another one here. Sweep, if you use your line chart, sweep, break of structure, price came back and went down. So that this works mostly on the trending market. When the market is actually trending. Daily card. Backtest it, try, continue. I'll be mostly sending setups just on it, try to make you guys understand it very well. Same thing here. Daily time frame on Sol USDT. Line chart. Sweep to the upside, broke of structure to the downside. What do you expect? Price to come back anywhere inside here and sell off? I think it came to this levels just on the daily time frame. So you don't need to go to the 4 hours again to start looking for your key levels. If the one on your daily time frame is obvious, what happened? Price came there. That you can that's why I said you can still take yourself from here and start selling. Once price have got to key level, but it's always good to confirm everything first. I think this should be the confirmation where price broke the structures to the downside, came down, came back. So you can still use once you have things like this, you can still use your Fibonacci to confirm it. You get this one makes you more sure. You get it makes you more sure and more safe to take any trade. I think price came back, reacted from somewhere here. This one has this pullback as liquidity. Let's work on it. Let's work on it. Let's work on it. 1 hour time frame, this is one as liquidity. Then 11. B shape turn into an E shape. Price tap there, and we had this sell from here to this point. USDT. Yeah, I think I had another one on the USDT. Okay, daily time frame. What do you have on the daily time frame? Line chart. We have sweep, break of structure. Are you guys seeing sweep and break of structure to the downside? What do you want to see again? You can still wait for price to come as price came back to this key level here. You can go to the 1 time frame lower to look for your key level if you that one doesn't interest you. This was our key level on the 4 hour time frame. Price came to the key level on the 4 hour time frame. Now, yeah, what do you expect? You want to see a break either on this 4 hour time frame or on the 1 hour time frame. Here was our break of structure here, which we waited for. Price broke structure to the downside. And now, once you have gotten this, what are you looking for? You're looking for entries. You can now start going down lower, 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 lower. I think low here. Let's see, just on this 4 hours. Line chart, we had this QMR. This QMR here was very valid again, where price will actually come from. But now, while refining, you can refine your setup by yourself. This was refinement. Or this one here. This one actually makes sense because it's closer to liquidity. No, this one. And you see price came tap there and we had this sell to the downside. So let's check now. This these are traits. If you guys knew everything like this, you guys could have been taking them. Let's check BTC. Same thing on BTC USD. Daily time frame. Daily time frame. Or any other time frame of your choice. What happened here? Line chart. Line chart. Sweep. Can you see sweep break of structure to the downside? What do you expect? Price to come back into the R range and we have this look for a key level there and sell. What happened? This was a key level. This was a key level. Price actually came to this key level. Tap into this key level. I think 1 hour time frame low. Price actually came, tap into the key level and had this sell. This one, you don't need all those breaks and everything, but you can actually take your breaks. For just from here, you have liquidity already. You can know this already bearish. You can start selling from here if you wish. But again, if you want to be very sure of everything, what do you want to see? Break of structure to the downside. Then we had price reacted, rejected again, came here to this is why I said this zone before, this is a last resort zone. A price may actually come to this last resort zone and react from it. So price broke structure here. This was a liquidity inside here, then came to our last resort and you had your trade. Voila. So I think that should be all for what I had. That should be all. So just work on it, work on it, work on it, work on it. If you have any questions, you can ask me, and we're going to analyze it together. Any questions, any doubts, you can call me now.
Yeah, I just had a couple questions.
All right.
I think I sent you a message about it. I understand the whole concept. I think you showed on XRP. It might have been, but I guess sometimes when you're drawing the key levels, obviously the V shape or A shape, um, that sometimes we get hung up on that the V shape has to be, I guess, marked on the bottom, and I'm looking for more of a support, which buy option in that area. And that's used,
Mhm.
sometimes that's used for like cells. That's why I think I sent you in a message. I think an example. I think you showed one on XRP of it being marked.
Yeah, I saw the message. Let me check it out. I saw the message, but all right, for SNR, if you have it, making it fresh. I think wait, the one asking about fresh and unfresh levels.
Yeah, two different questions. And then the second question was if you draw a key level, and I know it's not always perfect, but you get a wick rejection, and I see sometimes that same key level is used for an entry, and I know without a body going through it, making it fresh again. So I said a question about that.
Yes, you can actually still use the key level in case you have, if let's say, because each level can be used 4 times. Are you getting? A level can be used 4 times. Let's say, for instance, we have something like this. It's a key level. Yeah. So we have this line started from here and it's coming. So we had, let's say, we had a week here pass through this level. It's on fresh the first time. For it to be fresh again, you want to see the body breaks it. The body breaks the level. It becomes fresh again, continuous moving. What happens? A week passes again, becomes unfresh, continuous moving. The body pauses, makes it fresh again. You understand? So we have one touch, two touch. The third touch, let's say the third touch was, let's say, price touch it the week again. And now you're expecting price to come to this key level here when, yeah, let's say we don't have anybody here to make it fresh. But we are expecting price to come to this key level here and react from it like this. So if you're doubting, what do you want to do? Use your storyline. Are you getting? Use your storyline. It's going to help you a lot. Use your storyline. Just expect price to come there to that key level. What do you want to see? You want to see a tap into the key level like this with the body, with the wick, sorry. Price tap with the wick and close below. Is everything is in this PDF here. Is your higher time frame SNR. What happened? We have a higher time frame rejection, price came, tap into the key level, then gave us this rejection to the upside. What do you want to see? You want to look for a lower time frame breakout. So in a lower time frame, you're going to see a sweep, break of structure. You want to see a break of structure, not this, not like this. This one is just a demonstration. Or like this one you are going to see here, like this here, like this one. We see a break of structure to the downside and price will return. It's your left shoulder, head shoulder, right shoulder. Price will return, then tap and sell off. I hope I'm making sense. I hope that answers your question.
Yep, and I was
Maybe
trying to find what page. I'm on the same thing real quick, so I can
that's
show an example.
68, 68. Page 68.
Uh,
You can keep asking your questions, keep sending your questions. I have enough time for your questions. There's enough time. Today, we're going to this class, we're going to have another class again. Today should be Friday. We're going to have, if possible, we may have another class tomorrow, Sunday, Monday. We're going to have courses always, Zoom calls always. I'm always there for you guys.
So on page 48, when it has those three taps, that's what I was kind of referring to. I know that's referring to the engulfing, but it's a similar point.
On the engulfing, we're going to do the engulfing another day. I'll explain you guys how the
No, I
engulfing
know, but it was just a question, like a similar.
page 48, page 48, page 48.
You see in that chart with the three, yeah.
Yeah, this one is actually valid, but if you want to see you want to always see your key levels there. You want to see your storylines. You want to see your storylines. That's why you see this one's on the M15. This was just for entries, and this is mostly trend line. I think this is a trend line. This is not a key level. This should be a trend line. This is on the trend line. The two patterns collide, confirm some momentum. This is for trend lines. This one, just for trend lines. You can see this here. This for trend lines. Just to mark up your trend line and all those trend line confirmations you can see. You have these trend line confirmations. These trend line confirmations. That's for trend lines. But on the chart, you won't even see anything like that and you want to take the trade. You won't see something like that, you want to take the trade. That's on the 5 minutes just for conferences for you to take your sell. I think you had another question. The first question, can you come again with the first question?
Yeah, I think you're on XRP if you want to go to the chart on the candlestick.
XRP, XRP.
I think I saw it on XRP, I believe. Um, okay, so yes, to left a little bit. Yep. Yeah, that line right there. Would you I know you marked the top one, but I was that's kind of my question with the key level. If the bottom, I'm marking for a V shape, that can also be used for a sell.
This one. This is a
That's
V
what
shape
sometimes I
here.
get confused on.
This one. Are you talking about this?
Yes.
Yeah, this is a V shape here. It's broken and price comes back to it and it's reacting from it. So I was actually waiting to take sales from this point here using this guy as liquidity, taking sales from here. But I noticed price was actually bullish from here. This is just an example. If a A shape which turned into a V shape, or it's just like a flip zone. Can you see this is just a V shape? I don't know. This shouldn't be a burden because this is just simply breaker blocks. This shouldn't really worry you because this is simply breaker blocks. We have price break structure to the downside, then comes back, tap there and go down. Breaker blocks, you want to always see it like this. Breaks and comes back to it and react to the downside.
Okay. Yep. That makes sense.
Yes, and especially you can take this just like this if you have liquidity inside here. You can take your sell. But now you can still look for your storyline inside here. Look for your storyline inside here, which is if this is on the daily time frame, you want to go to the 4 hours, wait for it to reversal. And move reversal one time from lower, look for your lower time frame breakout, and you can take the right. I hope that's clear.
Yep, that makes sense.
All right. Thank you very much. Stella, is it a must to see a sweep be protected on the higher time before the kilo? No, it's not a must to see that. You can just use the basic method which we have to find our key levels. But that just helps you to like validate your direction. I get it. That just helps you to validate your direction. It's just another way. That's why I say it's one of many. You get it's one of many. You must not see a sweep and break of structure. You can just see a normal key level like this one here. Price comes back to this key level and it tests it. But now, we are using this sweep and break of structure and all this stuff so that it's going to like guide you to know what you're actually looking for. Are you with me? Because most of the time, you guys just look for setups without actually knowing what you're actually looking for. Just want to come and look for any key level. Like, for example, it doesn't make sense if I just come here and I look for any random key level and expect price to react for me. Are you seeing? I can just come and say, okay, it's a random key level here, a random A-shaped key level here, and I expect price to actually react from this A-shaped key level. Price is never going to react from it. And maybe when it's reversing, it's just going to pass through this point to the upside. Or for example, this one here, this is a key level. This is a key level, an A-shaped key level. Let's say I was expecting for a reversal here. Price just come and takes me out and go to the upside. But the only thing can guide you is just a story. And that's why sometimes you're going to have a storyline. If the start of a storyline, but yet price will still go and hit your stop loss because you are not having all the converses. So the reason why you always have that sweep is just to validate it. According to SMC, we know whenever there's a sweep, this guy here is called a protected high, meaning it is protected. It is protected because of this sweep and all these stuffs. Okay, it has already taken out liquidity here, and we have a range where we are going to have an internal range liquidity here where price comes, sweep that internal range liquidity and go. Whenever I see price coming up to this guy, that means we don't have any internal range liquidity here, and maybe price just wants to come and satisfy itself by taking out this guy. I hope I'm making sense, Stella.
Yes.
So if on a key level we say maybe 3 retests from different candlesticks only have H4, which break of structure will you consider? The break of structure in the first, second, and third. And key level is maybe 3 retests from 3 retests from different candlesticks. H4, which break of structure will you consider? Can you explain this second question?
Okay, I mean like if you move on the H24 and then you see a key level that has been retested, but then like it's been retested with like 3 different candlesticks, but on the same spot, on the same zone. Which break of structure do you consider on the H4? The first, the second, or the third one?
Okay, it means something like this. Let's say we have this an A-shaped key level on the daily time frame. Let's mark it out with this guy. Then let's say price comes, taps into the key level, taps again, taps again. Is this what you're talking about?
Yes.
Look, just wait for a breakout of this, all these ranging stuffs. I see.
Mm-hmm.
Just wait for a breakout of
Yes.
these stuffs. Whenever there's a breakout, just know price is going to come. If you come back to this your range zone and you go down, just wait for a breakout. Everything here is just consolidation. You just need a breakout of that consolidation with reversal. That's why you can even add trend lines to it inside here and all the stuff. Just wait for a breakout. Just look for the one that gives you a breakout. That's the one you want to look out for. The ones that start a storyline, you write with the story. You tell the story. I hope that's simple.
Yes.
Any more questions?
Yeah, I asked the last question on the chat.
When on the H24, you notice prices ranging. Will you avoid looking at the setups? Yes, I'll avoid looking at the setups because I don't have money to waste. I'll just avoid looking for setups. I'll go to another pair and I'll look for something trending and all those things because I don't want something like this price doing its own thing. Then I'm also there waiting. I'm not that desperate. You don't need to be desperate for profit. Get price doing anything here, and I want to use this V-shaped key level for my price may come and is tired of this range and breaks to the downside and take me out and just start doing its own thing. You understand? And just know that
Yes.
we always look out for directions in break of structures. Yeah, that's just our basic, don't complicate it. Basically, we look out for directions in break of structures. So whenever we have break of structures, we know our trend is that direction. I get it. Wherever we have a major break of structure to the upside, we know our trend is bullish. Whenever we have a major break of structure to the downside, we know our trend is bearish. Okay, so don't always be be desperate to look for setups. There are days this market is not going to be very fruitful. You understand? There are days you come open your chart and you're not going to see what you actually want to see. You close your computer and you stay away. Close your computer and stay away. Don't force it. Don't force it because
Okay.
whenever you're forcing it, then that's when it's going to be trouble. That's when it's going to be trouble.
Mm-hmm.
So if you have
Okay.
your preference, you can always take your set straight on your preference. So you make a lot of money. I think I've been teaching you guys risk management, how to manage your risks if you don't have enough capital. So be careful, don't waste your money, don't waste your money. You see something is not that clear, don't take it, don't force it. Like the market will never run away from you. If you have your $100 and maybe you really want to make money, don't go and start like looking for anything because you want to flip your $100. And again, don't use money you've kept for something. You want to use it to trade. It's not going to help you. Let's say money for fees, money for rent, money for or borrowed money, or someone's money they gave you to keep. Don't take that money and you want to invest it in the forex market because you're going to blow it. It's not like it's something that may happen. It's what is going to happen. You're going to blow the account because you're desperate. You want money. So any rubbish you see on the chart, you're going to take it. You understand? Any money, anything you see on the chart, you're going to take it. But trading should be money. Trading money should be money you don't have any special use for. You understand? Let's say if you have your salary at the end of the month, which is, let's say, 200,000 francs. Take out 50,000 francs from it and you say, okay, this 50,000 francs is for trading. You have nothing to do with it. It's for investment. Trading is an investment. If you're depositing in your broker account, you know this money I am investing this money. And you know how investments always turn out. Investment has two ways it always go: profitable or non-profitable. You may either make a gain or you make a loss. You understand? You either make a gain or you make a loss. And there are two things involved. You're going to actually accept one. I hope I'm making sense. Any other question you can ask concerning what we just did?
Yes. Yes, I have another question.
All
So,
right.
like when doing the refinement and you're looking for POIs on the lower time frame,
Mhm.
I think I read in one PDF you sent that if the PDF is fresh or unfresh, it doesn't matter. So I just wanted to know if it is true or not.
Yes, when you're looking for lower time frame entries, if it's fresh or unfresh, doesn't actually matter. Just take it. Just take it if
Okay.
it's fresh or unfresh, especially if it's something like this. Especially if something like this on a lower time frame, you have this one has stability. If you have this on a lower time frame, call for me, share that setup with me to let me also eat from it. Because I'm looking for it. I'm fishing it out. So I hope that's clear.
Yes.
Any other question? Any other question? Is there any other question? If not, then we can close it for today and continue another day. Again, what do you want to do? First, you want to look out for direction. Next, you want to look out for key level. And next, you want to look out for your entry. Come on your chart, daily time frame or weekly time frame. You want to see price sweeps and break structure. You want to see price sweeps. That's, let's say, for example, on the daily time frame, price sweeps and price break structure.
Or showing sell, daily showing sell. I don't know where exactly to take the show.
Is someone talking?
Yeah.
Etienne.
Please have yeah.
All right,
Good evening, sir.
Good evening.
Please I have a question on AUD USD. The
Yes.
weekly, there's a weekly fresh key level showing a sell.
AUD.
Yeah.
So
The thing is, the weekly is showing a sell, the daily is also showing a sell, and the 4 hours is showing a sell. I don't know where exactly which key levels to trade from.
weekly, we have just weeks on it. Okay, this is the month, sorry.
Oh, weekly.
Okay, weekly. The main line chart. Simple. I think this weekly high is not that clear. All right, here we have this sweep, we have this break of structure sweep downside. I think I had something like this already. So we have this one. Let me take everything out from it. So we have this sweep. Then we have this break of structure, the downside. So this is protected here. So what do? We want to go to, we know price, this is our range here. This is our range from here to here. So what happened? Price is already in our premium zone. Time frame lower to look for a key level where price will actually react from. So now, just on the daily time frame, you can already spot that, okay, on this daily time frame like this, what am I seeing here? We have this one, it's a key level where price will react from, this head and shoulder key level. It's also a key level where price will react from. So a key level, this one has already passed. So it won't work out again. Then, so these are levels you're actually looking out for. This one has already passed. Then we have this one. Also, this open close inside here, you can also actually wait price to come to any of them. So now what do? Price should come to any of this level, then you should see a pullback. Still on this 4 hour time frame, a pullback, and if possible, wait on this 4 hour time frame to see a break of structure. We can go one time frame lower to see a break of structure from there. Break of structure, and you can start entering. You wait for a break of structure, wait for a pullback, and you have to sell to the zone. You get, but in case this doesn't, then I've also seen something like this. Something like this one. But if this one was actually going to work, I was actually seeing this one, but this one played out already because I had this one here. This one played out. I had this sweep. Can you see? I had this sweep here, and I had this break of structure here. This break of structure here. And what happened? I was expecting price to reverse, come back into the zone. And what happened? Price actually came back to the zone. Came back to the zone. I think it seeked our last resort zone. This was a sell here. We had this sell. Very mighty sell. Yeah, this was a sell. So now what happens in case you don't see price, if you see price just coming up to the upside and price breaks this key level, break this other key level, you have nothing to do, my brother. You have nothing to do with the trade. I mean, you have actually nothing to do with it. Unless price comes, taps, and start giving you signs of reversal. That's when you can take, if you've seen a sign of reversal, that is when you can take the trade. And if it goes against your stop loss, like let's say if you have seen something like this, if you've seen something like this on the lower time frame, one time frame lower, break structure, and price comes, you're looking for a sell now inside this zone from year to year. looking for a sell on the lower time, let's say 1 hour, price comes and continue going up. That's when you can say, all right, the trade failed me. You get, but in case you don't see something like this, you don't see anything like price comes, sweeps, breaks structure, then comes back here to go down. You don't see anything like that. You just start taking sales from here. Yeah, a failure. You understand? You just want to see something. You want to see this in lower time frame price. Then break structure comes back. Just a head and shoulder. When you see something like this, before you start looking for a sell at this zone here. So just be patient. If you see prices continue going up, then stay away from it. Just stay away from it. Then I think I hope that's clear, Etienne.
Yes.
All right. Then we had GBP USD. I think the last class GBP USD. I showed you guys something on GU. What are we having on GU on a weekly time frame? And what I'm happy with was we analyzed everything here on this GU together. I was actually showing you guys right from January to I was actually showing you guys what will happen on GU. Let's see, let me use a good program. I wonder. Okay, yeah, here's Wonder. I actually showed you guys everything here. We had this one, we had everything, this one here too. This was the weekly time frame here. Weekly time frame, line chart. What we have? Basically, use the big scale. We had the sweep of this guy. We had a protected low. And I think we had this break of structure. This massive break of structure here. This massive break of structure to the upside. Then this was liquidity. Price came back and decided to take his own. Yeah. Price came back. Yeah. Then I think we did this trade together. I took this buy from here. So what happened was price came, tapped into our key level. Here's our key level. How do you get our key level? Turn on your line chart. You're going to see this is a V-shaped key level. Done by your candlestick chart. Price came, tap into the key level. We had this reversals. What do you do next? Time frame. Switch to your lower time frame. This one here, there was nothing here. I cannot wait for right to this break of structure. Go one time frame lower again. And look for what you're looking for. Actually. Yeah, this was our break of structure here. First break of structure, because this was our touch. Our first touch. Price came. Tap here, but it close, it break with the wick. So it's not advisable sometimes, but sometimes you can take it if you're ready to take the risk. Then price came back, for stability, tapped into it. So I think there was a key level here on the lower time frame. If I'm not mistaken, lower time frame. This should be this. We had our sweep. Break of structure to the upside. Price came back, tapped into the key level. I see we had this pattern, even though it looks cranky, but sweep, price, break structure, then came back. Let's say it formed liquidity here, then came back, tap the upside. So this was where you could take your buy, and where are you targeting? Let's go higher. Where are you targeting? That was where now I mark out these zones here. These were my reversal zones here. I had this one first, had this one second, had this one third. On the weekly time frame or on the daily, you choose. So I had this one, I had this first one. This one, I think I got this one on the daily time frame. We had this first one, we had this second one, we had this one, this one. These were zones I was expecting price to actually react from. And what happened? Just imagine buying from this zone here. This was 1:75 weeks reward. Buying from here and you're holding the trade. This is weekly. This is 1 week, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 weeks holding the trade for 11 weeks. Imagine this could have given you 1:75 weeks reward. You get, but you're not just going to hold. You can enter here and you set your stop loss above here and you start entering, taking more positions because you already know where price is going to react from. That's the beautiful thing about the strategy. You already know where price is going to show all the reversals from. Here was where we had the reversals. Price came, I said it price came, tap into one of these key levels, reacted. And I think the last class I showed you guys before this week opened. Yes, I think it was before this week opened. I told you guys price is going to come back to this level. This one. You see, price is going to come back to this level. I saw guys that time, people were actually buying GBP, JPY at this point. I was like, no, price is going to come back to this key level. Tap here and buy to the upside. Price came in on the weekly time frame, tap, and we had to buy. Let's see if we could confirm with the storyline. This was a touch. Another time frame lower. Let's touch. But here also we could confirm our break of structure. But this candlestick, maybe this candlestick. I'll tell you guys one time you could use your open close, but that's very risky. You could use your open closes for, because this open close here, you see this a small budge here. So in this zone here is something. Good. And if you put it, it's going to magnet. You just pass with your magnet. If your magnet is on here, you pass with it. It's going to see price magnets that zone. You see price magnets that zone. Meaning something is wrong. See, if I pull my console, it sticks. Then something is happening there. You see, it's at this open close, exactly at the open close. You go one time very lower, you see there's a resistance zone there. Can you see? There's a resistance zone here at this point. So that I think we had a break of structure here and price retrace to the key level below here. And we had the buy on GBP, on GBP USD. So yeah, I'm not sure anyone took the trade. Sadly enough, I had to buy from there to the upside. I hope this is making sense. If you have any question, you can ask your questions before we close. It's already 11:29, 11:30. It's almost midnight. If there are no questions, then you can postpone the class to next time. I think if possible, next time we can do engulfing. If it's that important, we do engulfing and other stuff. Any other question? All right. I hope you guys have learned a lot from today. Have a nice day. Good night, everyone. I think we meet next time. Stay blessed.